So in this video, we're going to talk about Rivian. They reported earnings late last week, and on the news, the stock fell. This is despite the company reporting a strong quarter, reaching positive gross profits for the first time. However, the stock fell because weak guidance, which is something Wall Street never likes. Also, the company announced a recall on some of its vehicles. Now, this is the monthly chart. You can see that prices was clearly in a downtrend. And now things appear to be turning. Now stay tuned. We're going to look at a level that I'm keeping an eye on for buyers to continue to defend. However, let's get into the news. So Rivian's Q4 numbers were solid, including a gross profit, the company preferred metric, which accounts for the cost of production but excludes other costs of 170 million. Again, this was the first time the figure has been positive for Rivian, so that's a good sign. Company also posted a smaller than expected EBITDA loss for Q4 of 277 million. Now the problem, however, was a 2025 guidance that left investors hanging. Company expects a modest gross profit and an EBITDA loss for the full year of 1.7 to 1.9 billion. That's still an improvement over 2024, but that's not what Wall Street was expecting. The real disappointment came in the company's vehicle delivery forecast of 46,000 units, and that was down from 51,000 units in 2024. So they have actually declined. This is probably due to supply chain part issues. On top of the disappointing guidance, investors were greeted with the news that Rivian would need to recall more than 17,000 vehicles. The vehicles in question, the 2025 version of the company's R1S SUV and R1T pickup trucks, have a problem that leads to a failure of the low beam in cold weather. However, Rivian will replace the headlights at no cost to customers. Thank you, Rivian. Now, as I mentioned, stock was in a steep decline, has since bottomed, and you know when things have bottomed when you start forming buy levels. Now, although it's not marked in red, we're on the weekly chart, drop based rally. This is a weekly buy level at about $8.50. And you have another one, you have a drop base in candles, and then the rally. So this is also a reaction to this base rally. So this is another level of interest, and it did hold. You never got closes below the bottom of the zone. And on the most recent leg higher, we're going to go down to the daily chart. Now this level, not a S setup, because the recent rally did not take out the pivot high to the left at $19. So one has to be careful in taking this zone. Now you did get a reaction. You have the pullback, reacted. Now this is the drop off what we saw in earnings. And if I look at the bottom of this candle here, it is roughly at the 50% mark of the zone. So the zone is still good. Let's see if price continues to move lower over the short term, and let's see if we get that bounce. If I scroll back out to the weekly chart, let's see if we get that bounce, which would then be the next impulse move higher. Again, impulse move, pullback, impulse move. Again, in the roundabout bottom, now moving higher. Thanks for watching. Subscribe. Please like the video.